Entrepreneurial Camp. Everybody, can we give them a round of applause and welcome them? And so, because of the little mishaps at the beginning with the computer, we didn't get to do our normal warm-up, and we're not going to do what I was planning on doing, but just to get you guys energized, can we start the wave from over here real quick? The wave is going all the way around. And then bring it back. All right, that feels good. All right, that feels good. Now I feel good. All right, so first up, we got from Intersect, Truman. He's going to talk to you guys about what they do. I got the clicker. He's going to talk to you about what they do. Please give him a round of applause.
Great, thanks, Lee. And thanks to the AU team. Great to get a chance to present to you guys today. And some of you saw the 20-second pitch last month, and so thanks to these guys for giving us a chance to give you more of a picture of Intersect. We are a fintech company, and we're developing analytics for climate-smart investing. And the vision that guides everything that we're doing, and has guided my work over the last 20-plus years in this space, is catalyzing investment for climate-smart investments. So the big picture here is that to get to a sustainable world where climate change, where global warming is limited to 2 degrees Celsius, which still has some pretty bad impacts, that's going to take an additional $600 billion a year of investment in climate-smart growth. And how is that going to happen? It's got to happen through investments that provide the kinds of returns that most investors require. And if you're into the investing world, you know that the keys to that are better beta and better alpha. So that's what we're about delivering, is climate-smart beta and climate-driven alpha. So the big problem that investors face, and we've talked to dozens and dozens of investors, some of the largest investment funds around the world, is that they're overexposed to climate change related risk. They're underexposed to the opportunities that are created as the world addresses climate change. And so they're asking, what's in my portfolio? What do I own that's risky? What are the vehicles that I can invest in that manages this risk and provides some upside and lets us contribute to the solution of the problem? And then what are the benchmarks? How do we judge what we're investing in and how it's doing on a return basis and how it's doing in terms of environmental impact? So our solution is a best-in-class, a new type of analytic engine that is superior in a number of different ways to what's out there in the competition, the incumbents. And we're going against some 800-pound gorillas: Bloomberg, MSCI, Thomson Reuters, and a couple of other boutiques that are strong, but that we can do much more for investors with. True Cost and Sustainalytics. Our engine looks at a range of different factors that materially affect how an investment in a stock or a bond or other asset classes will perform, what the returns will be. So not only macroeconomic factors like GDP growth, but also technology factors, consumer preferences, environmental factors like sea level rise, but also very impactful policy factors, public policy factors like tax rates and gasoline taxes, and then finally resource prices. The kinds of products that we deliver are for large asset owners like pension funds, endowments, foundations, large family officers, and everybody that manages their money, from investment consultants right on through fund managers, institutions that manage a 401k, a mutual fund, etc. And the kinds of tools are analytic tools to understand what's in the portfolio scans and analytic tools, actual products, so indexes and ETFs, if you're familiar with those, and then tools so that fund managers can create new products, new investment funds that are high performing and integrate climate through back testing and other tools. We automate research, which has an immediate ROI benefit for research analysts, and if any of you guys have friends that are working in finance and Wall Street, that's where you start. That's the engine of really the financial services industry, and we help with a range of other research automation and inputs into the Excel-based models that anybody in finance, 95% of the users are using. So how do we do this? We're at the prototype phase, but we're a bit further along than most early stage startups when it comes to our prototype. And I'll show you the prototype in a second. So we're incredibly fortunate to have licensed from McKinsey and Company. Who knows McKinsey and Company? Raise your hands if you've heard of that. Okay, so not many. McKinsey and Company is one of the three most widely recognized global leaders in management consulting and analytics for growing large-scale businesses across the globe. So we licensed from them some of the most powerful Excel models ever built that understand how the economy works in particular industries and to understand how factors in those industries will affect the economy. And we've transferred that tool, which is delivers predictive analytics, but in weeks for $1 million, run by a large consulting team, and put it in a modern software environment that can do this much faster, much cheaper, and much more actionably for investment professionals. So my colleague Tejas, who is an intern for the summer, Tejas Desai is an NC State graduate student and has many accolades, including having been on a team that won #2 in a national robotics competition in India. We're very delighted to have him here, and he is going to help me walk through a quick demo of the prototype. So what we're showing here is the underlying engine covers hundreds of variables that affect investments. As I said, in those various areas, technology factors, resource factors, consumer preference factors. Here we're looking, it's a little bit cut off here, but there are slider bars that hands over to investment professionals the ability to run scenarios and say, well, I think oil prices are going to go up, I think technology prices are going to come down, and then understand what happens in the marketplace. We've got so it's a little bit messed up from the sizing standpoint, but we'll at least be able to show you two of the visualizations. The person who built this is a data scientist from Stanford, and formerly with Bridgewater, one of the top, probably the top performing hedge fund in the last 10 years. He's a great analyst and data scientist. He's not a great front-end guy, but the point here is to show you what kinds of visualizations we can run and the granularity and the power of running scenarios quickly. So here's a map of solar photovoltaic system deployment and the percentage of that is cost effective relative to gas and coal-fired generation by state, by year. So what we're looking at is it's set for 2018, and then as we change policy factors, for example, the implicit carbon price. So you see, as that goes up, you see greater penetration as the price gets higher, as you'd expect. Another factor is a technology factor. So the total technology, combined technology cost of deploying solar power. So as you bring that cost down, likewise, you see greater penetration. And then visually, if you compare that to the previous slider, you can see that investments are more sensitive to this factor, this technology factor, than they are to the policy factor. So here, and unfortunately just because of the browser we're using, it's chunked up a bit, we're looking at the transportation market. So switching gears, we're looking at the total stock of vehicles in the economy and different types of light medium duty vehicles. So this orange here, internal combustion engine. Anybody who drove here today, most likely they were using an internal combustion engine car. Some people might have been driving a hybrid electric. That's this little orange stripe here, like a Prius or something like that. Some people may have come with a Volt or a Tesla, and that's battery electric. We'll see that in a second. So here we'll just look at a couple of other factors. A technology factor, the battery cost, the cost of the battery pack that's inside a hybrid or a plug-in electric. And we'll also look at gasoline prices. So with gasoline prices, as the price goes up, you start to see changes in the marketplace, and as you get up to $5+, this actually, the one that's cut off over here, which is more interesting, is actually the sales. This is the combined stock, which changes more slowly. But as the gas price goes up, you see that change very dramatically. Then, if you're following Tesla, you know that Elon Musk says he's going to be able to deliver batteries for $150 a kilowatt. So right now that price is $800. If you bring that price down, then not only do you start to see hybrids like Prius start to get into the marketplace much more quickly, but you start to see plug-in electrics and, in the dark green, battery electrics. This has huge implications for the economy as a whole. Different automakers have different ability to meet this change in demand and different costs to do that. So that's how that will affect the investments in your retirement savings, other investments that you may make. So I'm just going to round this out by showing you a glimpse at what we're building toward in the beta. And I'm happy to say we've, well, I'll get to that in a second. So, thanks, Tejas. So here's an example of a tool that uses those same sliders for an investment professional. So what this is a breakdown of the risk, color-coded relative risk of an investment portfolio, equities portfolio, across 4 different scenarios. It's quantitative, it's rigorous, it's backed by some of the best modeling that is available anywhere, and we can run this for pension funds, for individuals, anybody in between. And if any of you use Betterment, they are a potential user of the same engine as well. Why us? Why now? So I mentioned to you, and won't go into more detail now, on the analytic difference. Nobody provides the combination of bottom-up fundamental microeconomic analysis and top-down quant techniques that we do. We also have a great capability in accessing very hard-to-find data from both public and private sources. We bring also the ability to refresh each of those things with an exceptional team, both with background at McKinsey, with hedge funds. One of our key advisors runs one of the largest associations of institutional investors on the planet, with members representing 15 trillion in investable assets, and so a great pipeline to the market. And we've got the capabilities to bring, we've already found, cost-effective tools that can underprice competitors with while offering greater capability, and to do that in a flexible and customizable architecture. The validation for the market. Who's heard of Morningstar here? Okay, great. So, you know, big leader in the marketplace. They teamed up with one of the boutiques that is a competitor of ours that has much less powerful tools to offer a screening tool of a set of ratings on 20,000 funds. Their competitors are talking to us about being able to one-up Morningstar with a better offering. Goldman Sachs recently made a major acquisition of a firm that offers analytics and advisory called Imprint. We know them well, and there's a possibility that we would be at least a provider and possibly an acquisition target for them in the future. Rockefeller Brothers Fund, one of the largest foundations in the U.S., has publicly committed to divest all fossil fuels in its investment portfolio, and other foundations are following suit. And there's proof out there that you can integrate climate change in your investments and make returns that are as higher at lower risk. And that's proven no better than by Generation, good friends of ours that are managing $12 billion. This is a fund that you may have heard of. It's led by Al Gore and David Blood, based in London. They have beat the regular stock market unscreened, and they beat all the indices out there. And the last data point, very powerful. So across the globe, pension funds, foundations, endowments, individuals have pledged to divest from carbon $3.4 trillion. That is a lot of money. Very few of them have done it yet because they're not confident in the tools that are out there. They're not confident in the people that are managing their money to tell them how they're exposed, what the vehicles and investment opportunities are, and what benchmarks they're using. That's what we're going to be able to deliver to the marketplace, and delighted to do that here at AU and in collaboration with you guys going forward. Would love to get any feedback and questions, and we've got a couple of questions we'll tee up in the Q&A. Thanks very much.
Any questions?
So how did you get McKinsey to sort of give up their secret sauce and allow you to use their models in the tech product?
but we'll get back to them. So they've got the use of whatever we develop, and we're not going after the corporate market at all. So pretty partitioned in that way. Great question. I've got a question and a couple actually, and some of them are not things that we're going to be able to cover now, but one is. So we'd really love to connect with other firms that are tackling similar data science problems, whether they're here at AU or elsewhere in the area. Or tackling similar markets. So going into the fintech market with big institutional customers and being particularly coming in as a small entrant. So either right now or as a follow-up, would love to get your recommendations on folks that we should be connecting with in the Triangle community. Any other questions about what we're doing or feedback on the presentation?
Sorry, are you all planning on developing your own vehicle or product in partnership with a bank like Merrill Lynch or something? Or do you want to just provide the tool or screening tool for other asset managers to use?
That's a great question, and we think about it every day to a certain degree. Out of the gate, because we don't want to be competing with our customers, we are not going to develop our own product. However, for example, we're in discussions with two of the large custody banks and two of the large bulge bracket investment banks on product creation. We would hand them over the tools, but that's actually a really interesting strategic question of whether some of them will say, well, if you'll do exclusivity with us, we'll pay you a ton. But that limits, of course, the growth across the marketplace. So if you've got a point of view on that, we'd love to talk about it afterwards. Any other questions or comments?
There's one right here, Truman.
Yep.
Two.
Okay.
How do you see what you do relative to what Betterment and Wealthfront are doing? Do you see, are you guys more competitor or more?
Not competitive at all. So ultimately, we're confident that both of those, and probably all of the major players in the digital wealth management space, will. I speak loud enough, so hopefully folks can hear. The question was around, are we competing with Betterment and Wealthfront? And the answer is no. We think that they are both customers, and so they're going to need to have some kind of a layer that incorporates this. And there's a screen that we're actually building for in the beta that will be the divest invest button, so that you can say, green my portfolio. Great question. Somebody else over here? Thank you, guys.